Hello, Jim here. Today I want to share with you one of the best ways to earn passive income that a lot of people don't take advantage of, and that's selling options and primarily selling them using a real safe option strategy, which is what I call the option wheel strategy. I'm also going to share with you in this video how I did last month in February. You can actually see it here on the screen. So I did over 3,000 again in February, which was a real down month. At the end of the video, I'm going to actually share my trade. So stay tuned for the whole video, and I'm going to go through each and every trade to talk about why I made them and how I did. But before jumping into that, I do want to mention that I call it the flat wheel strategy mainly because I'm not having a whole lot of assignments. I'm more selling puts and selling calls, and I've been able to have most of my trades either expire or I close them before assignment. Now that may change. A lot of these stocks that I invest in, and I've shared in previous videos, I want to be able to own those stocks. These are stocks that I want to own. They're value companies that I like. So, but what's really intriguing about this is how you can really do it in a passive way. To give you a for instance, in one day, which was February 16th, which I believe was a fairly down day in February, I was able to do $490 in selling options in literally 15 minutes. And I was able to do that in a passive manner. What I do is I sell options using Schwab, and they have a program where they guarantee if you do a market trade, they guarantee what you see at that point when you're ready to commit the trade. And if they can do better, they will do better. And probably 50% of my trades, I actually do better than what I'm seeing on that review screen before I actually commit the trade. So, and that's allowed me to make it very passive, so being able to do two trades in 15 minutes and make $450, then go on and, do whatever I needed to do that day has been wonderful. And especially during a volatile market, February was a pretty bad month for the market. I believe it was down significantly, and I was able to do 3,000, over 3,000 for that month. Which is pretty miraculous when you think about it. Do you think the market's hit the bottom? That's one thing I'm not completely sure. I do think we're going to have more lows. We potentially may go lower during the summer, mainly with the war going on in the Ukraine and all this other political stuff going on. I think this is going to be kind of a rough year. My guess is we're going to be even for the year or slightly down. I don't think we're going to be significantly down for the year, but I do think we're going to be slightly down. And that makes it a really good time to be selling put calls, both vertical put credit spreads as well as cash secured puts. So, and then I guess let me go ahead and turn to my performance for last month. So I did 17 trades. I made over $3,036. So both in January and February, I did over 3,000. And for February, my average trade was $179, which again, that's one of my goals is to increase my trades each, or the amount of my average trade each month, so I can do fewer trades and make as much, if not more, money. And then I did 11 puts, and these are kind of even close, fairly evenly spread between cash secured puts and vertical put credit spreads. And I did 7 covered calls. So next, I'm going to jump into these trades. I encourage you to stick through the whole video, and I'll go into detail as I'm working through each and every trade. But before I jump into that next part, I do want to mention I do have a Patreon where I share my trades. That's how I know it only took me 15 minutes. I was able to go back and look. So when I make a trade, I actually post it to my patron members, and literally right after I make the trade. So I'll make the trade, and then I'll jump into Patreon, and then I'll post it, what I actually did. And I'll also do that on Discord for those same members. So I encourage you to take a look. It might be something you're interested in. And as always, please hit that like button. And that being said, let's go ahead and jump into the next part of the video. Thanks for joining me. Okay, I've got my February spreadsheet open, and let's just jump into it. Let's go ahead and get started. So the first trade I did was another Coca-Cola covered call, and I did $178 on that. It was not a roll; it was a new one that expires on 8/19/22. It had a delta of 21, so very close to the delta I'd like to get, which is I like typically to get close to a 20 delta, and I made $178 on that. And again, I own a lot of Coca-Cola, and I inherited it as a teenager, and I've kept it over the years. The cost basis is so low that this is one way to earn some income with a stock you've picked up long time ago. You can sell these covered calls on it. So this is I typically in every month I will do a few of these. So let's jump into the next one. Was I rolled a vertical put credit spread in Intel. Now Intel's been down a little bit. Some of the earnings have been not the best, but I was able to roll it. I did widen the spread a little bit, so I rolled it from expiring February 18th. I rolled it out to April 14th, and I kept the inner arm at 50, but I did widen the spread a little bit. Originally, it was 42.50 was the outer arm. Now it's 40. Overall, I ended up making 190 on the trade, and at this time, I believe, Intel was in the money already, so that's why you can see the pricing is a little bit higher. I believe it was 43, 44 at the time, and I was able to roll it fairly easily on a down day. Um, and Intel's a company I like now because of the price that's come down. They pay a really good dividend. I think they're paying like almost 3.2%, something like that. Next one is BPMP. This is a pipeline company, and it pays a really good dividend. I think it's close to 7, 8, might it be as close as 9% dividend. And I sold a covered call on it, so I'm earning really good dividends on it as well as being able to sell covered calls. I took a little bit more risk, 0.286, and I did it more than 6 months, so it expires on August 19th. And I did it for 20. Now I believe it's come down a little bit. I believe it's around 17. At this time it was at 18. And I made $208 on it. And I believe it was three contracts. Yeah, it was three contracts. Also, this Intel up here was three contracts. So you can see I'm doing more trades with three contracts. I started with one contract, then moved to two, and now I've gone to three. But a lot of times I'll only do one contract. So before, though, back when I was only doing one contract with selling options, I never did two or three. So you're going to see more trades with three contracts appear here. So I did good. I did $208 on that, and it's like I said, right now it's around I think $16 or $17. So if I could get 20, and I think I paid 17 for this, I would make a really good return. But my guess is I'll be able to roll it again and it will expire. So the next one was Corning, and I own about 400 shares of Corning, and I think I had the opportunity to do one more covered call, and I did it for 60, and at the time it was 42. So um, it's pretty far outside the money. And let's see, the delta was 22, and I made 169 on it, which was really good. So Corning's another company I really like, and I do both puts as well as covered calls on it. So I'm fine with owning more. It pays a good dividend, and it has really good earnings. It's just the company overall that I really like. The next one is ARKK. Now I bought ARKK years ago at like 40 some dollars, and so I'm still writing cover calls. I'm not doing any new puts on it, mainly because it's dropped down so much. Here you can see the cover call is for 92.22, and then it was 76 at the time. I believe now it's in the 60s. This was a 22, and it's probably going to easily expire outside the money because right now it's in the 60s. It's so far outside the money. So I'll probably close it if it's probably soon here, and probably write another covered call. So that even though ARK has been kind of a problem child for me lately, I can still make really good premium selling covered calls. And this was for one contract, and I made it $203. So Again, not bad. And I do feel like at some point, and it may be pretty close to the value it is now, that it's rightly priced. I think in the 60s it's probably rightly priced, especially if some of those growth companies start making some good money. So next is I rolled a cash secured put in iRobot, and iRobot's been kind of an interesting story. I like the vacuum cleaners. I like a lot of what they're doing, but their stock has been going up and down, and it's been very, very volatile. But that also means it has had really good premiums. So I rolled it from out to 318 March 18th, kept it at the same strike price of 55 at the time. At that time it was 61. Now I believe it's 57 or 58. I believe it's come down a little bit, and I made $165 on it, which isn't bad at all, and it was one contract. So that's one I typically don't need to do more than one contract on to make some pretty good premium. Next, I've got a cash secured put, and I wrote another one on Lumen. And Lumen is a great stock for anyone who wants to kind of get started and they want to sell, their first put. Then I encourage you to look at Lumen. It's inexpensive. This one I sold it at $10. I believe it's come back up. I believe it's over 11 now. This was expiring on 4/14, so about 2 months, about 60 days. A little bit of a higher delta, 30.3 or 30 delta, and I made $124. And I believe it was three contracts. So if you did this with one contract, you're not committing a whole lot of money. It's one of those you can do fairly well. And I probably have got at least nine contracts currently in different expiring on different days using Lumen. And it pays a really good dividend too. I think its dividend is maybe as high as 9% currently. And then next, I rolled a vertical put credit spread in Walgreens, and Walgreens is another company I like. It's I use them fairly often. We have several near us, and this one I pretty much just rolled it out using the same strike prices, 47.50 for the short, and then for the farther out spread 40, and I rolled it to March 18th. So I kept it at the same value. At the time, it was pretty close to being in the money. You can see, so that's why it was a little bit more expensive to close it. But I made $120 on that trade. And again, Walgreens is one that I'm perfectly fine with owning at 47.5. And at 47.5, it pays close to, I think, a 4.5% dividend. So again, another really good company. It's got really good numbers. Next, we have a covered call again in Corning, and this one is another new one that I wrote, and this is a Leap, and I found really good cash sometimes with Leap, so I did this one expiring on 1/20/23, 0.273. Actually, it's a covered call, so it's not a put. So this was another one of the like I said, I have 400 shares, but I made $171 on it. And so I kind of question that trade now, looking at it tying up 100, the value of 100 shares for that long. But at that time, I decided it was a good trade. So next, I rolled a vertical put credit spread in eBay. So I started selling puts on eBay, I believe back in January, may have even been December, and I was able to roll this one out from literally for another month, and I kept it at the same 60 and 50. Now it's come down. It on the 16th it was 58.6, and I think it may be like 56 now. So this one is one of the ones that I do have that's in the money, but I've been able to make really good premium. I made 278 on that roll, and I think I might have done close to that on the first roll. So I'm making good money with it. And I just like eBay. I use eBay both to buy and sell stuff, and it's one of the companies I feel like that Amazon is probably, I don't know, at times I feel like Amazon has gotten themselves in a little bit of trouble, and I feel like eBay may be able to take advantage of that, since they've kind of not gotten into selling some of the same products that people are selling. So Again, another good trade. This happened on the 16th, so this is one of those trades I said that I did one on the 16th in literally 15 minutes. So it was a relatively easy roll. And then this, I rolled a cash secured put in Lumen, and again on the 16th, and I rolled it from 11 to 11. So I kept the strike prices, and I rolled it out a little farther, 4 months, and Lumen had gone down. I think this is when it got even below 10. So I did have to pay a little bit more to close it, but I got good premium on the one I sold, and I made 212 on it. Now it's Lumen is I believe above 11. So it's out of the money currently. Not much out of the money, but it is out of the money. And that's another one I did. So it was these two trades. It was this eBay and this Lumen trade that I did on the 16th in the morning, and these were both market trades. And I believe the Lumen, I made $20-$30 more with the what I talked about earlier with the guarantee from Schwab. They actually, they guarantee what you see when you review your trade, and actually I did better. So this is one of the ones where they were able to do a little bit better, which is something I really like about Schwab. Next, I did a vertical put credit spread in um, Schwab. And this one I did. This is probably one of the higher price stocks that I have worked with, and I did it expiring in the 18th of March. At the time, it was $86. I did an 80 inner or short strike, and I did the outer strike was 70, and it was a 22 delta, and I made $183 on it. So a very good trade, and I like Schwab, so it's one of the companies I really like. I believe it's gone up since then. I think it's in the 90s now, so it's even farther outside the money. Yeah, it actually this was last Friday, and it actually expired outside the money. So a really good trade. Next is a vertical put credit spread in Cisco, and Cisco is another one of the companies I really like to trade. The outer I did at 50, and no, the short was 50, or the inner was 50, and the outer was 40 strike price, and this was 0.196, so a little bit better than a 20 delta, and Cisco was 55 at the time. So it also met that rule of 10% below that I like to do. I like to sell puts at least 10% below the current price. And I made $129 on the trade. So not bad, not bad at all. So, and I continue to write options on Cisco, and I would really enjoy owning them. Again, I haven't been assigned with Cisco, but I'm okay if I do get assigned. So next, let's move on, is Ford. My son actually got me into Ford. He's a Mustang person, um, and I'm looking at actually maybe buying a Ford truck, maybe a Ford Ranger or F-150. So it's something I'm looking at, and they've had really good premium there. I've been able to do quite well with Ford. So I closed a 16. I opened again at the same level at 16. That expires in March 25th. So this one, I believe I rolled again just recently. I think I rolled it yesterday. And at the time it was 17 and a half. And I believe it's a little bit closer to the money. I think Ford now is like 16 and a half. And I did 137 on the trade. So I did quite well. And I believe I did close to that when I rolled it yesterday. So, next, I did Apple, so I rolled a vertical put credit spread. And Apple's probably the most expensive stock that I deal with, and I just like Apple. They have really good numbers. Um, I've been able to sell vertical put credit spreads on them for a while and make fairly good money. So this one was, I just rolled it out using the same strike prices from 325 to 41. So I believe this one I'm looking at rolling probably next week, and Apple's come down at this time it was around 161, and I don't know why I put it up there, but it should be down here. I actually it's a low delta, 14 delta, which is well below my typical 20 delta, and I made $144 on it. So I think at the time, part of the reason I was in a little bit of fear that day, and I thought, well, the whole market's coming way down. But I think it was when the Ukraine war started, and I thought, well, maybe even it will go and get down below 140. But stocks have held pretty well since the Ukraine war started. So not what I would have thought, but that's another indication you can never really figure out the market. It's best just to stick to things you want to own and make safe trades. So next, let's jump into another covered call for Coca-Cola. This is another open position. This is a leap. I did it way out, and I said I'd be perfectly happy selling Coke at 65. It's currently around 60. This was a 22 delta, and I made $250. So a really good trade. I think it was my second best trade of the month, or it may have been my best trade. No, I did 278 on my eBay trade. So a really good trade, and I y'all might not understand, but a lot of these I don't have too many expiring on the same days. So if I find, well, I only have one contract and I'm willing to have two, then I'll do another one. But I haven't had anything get assigned from Coca-Cola since I believe 2019. It's been a long time, so being able to roll these or close them, I've been really able to avoid assignment. Mainly because my cost basis is so low on Coca-Cola. If I get assigned, then it is a fairly significant tax impact. Like I said before, I think most of these I got when I was 16 or 17, which is over 40 years ago. So I think there's been multiple splits. But Coca-Cola is another good company. I don't sell any puts on it, but for some people, it may be one of those companies you might want to look at. Um, Next is Vertical Put Credit Spread. This is a new company. This is ASO, which is Academy Sports, something I decided to jump into recently. I like Academy Sports. I've got the store near me. I end up shopping there quite a bit, and they always seem to have the best prices. I mean, the sweatpants and the different things that I like to own, the shirts, the tennis gear, golf gear, pretty much everything. They seem to be less expensive than a lot of their competitors like Dick's, and their numbers have been good. I think Schwab ranks them as an A rating. I think they've just recently started to pay a dividend, but I did a 30-20 vertical put credit spread, the third being the short and the 20 being the outer arm. It was a 28 delta, and I made $169. Now, since then, I believe it's shot up to much higher than 32. It may be as high as 37 or 38 currently, so it's very far outside the money. And it had expired, so today's the 20, what is today? The 24th, March 24th, and it expired last Friday, well outside the money. So that's all the trades for the month. So overall, I did 3,036. My average trade was 178.63, which I believe is one of the highest I've had of any month, with being able to do only 17 trades and make that kind of money. And I had 6 covered calls, 4 cash secured puts, 7 vertical put credit spreads, and I only did 7 rolls this month out of 17 trades, and I had 10 new trades. And I did note here that um, on February 23rd, I did 3 trades, which was the most trades of any month, and I think I did $444 in those 3 trades. And I did those kind of scattered during the day, so it wasn't like the 15 minutes I mentioned on February 16th, which I mentioned again, and I did 490 um, on those 2 trades. And I actually did more than just those 2 trades. I think I did 2 more trades that were in my Roth IRA that I did, and I think I might have done another $150 in those other 2 trades. So, and again, it was very passive. This is something I'm working full time, and this is something I jump on. I work from home, and I do these trades quickly, and it's added an additional 3,000. And this is the second month where I've been able to do 3,000 fairly comfortable. So far in March, I'm not doing quite as much. I think right now I've got another week left, and I believe I'm more like 2,000, so it may be more like a $2,600 month. So a little bit less this month, and this is the third. March has also been kind of a down month. We did have a rebound last week, but this week's been a little bit down. So, and then this over here is just showing some of the total account value, and then if you base it on what cash I have, and most of these two brokerage accounts that these trades are occurring are fully invested. So it's just on 104,000 in cash, and then writing the covered calls. I kind of relate it to like a 6% yearly total above and beyond what I was making before. So this has allowed me to, the fact that I can do it really passively, it's also given me financial independence. So the work I'm doing now, I enjoy. I'm a software consultant, so I'm currently working on a new system for a client. That's keeping me fairly busy, but this has given me the opportunity to earn more money, and it's kind of helped me reset my retirement goals. And I'm really financially independent now, but I'm not really retired. I don't know that I'll ever fully retire. I feel like, to me, this is doing what you want to do when you want to do it, and not having to do things you don't want to do. So I hope you enjoyed this. Thanks for joining me today, and I hope you return soon. Next week I'm going to have another really good video. So I'm I have more in the works. As you can tell, I'm not in entertainment. I'm more kind of down and dirty kind of person. Not down and dirty, but I like to show what I do, and I'm less about entertainment and more about how to do this. So again, thanks for joining me, and I hope you have a wonderful day.